No, so you invest in the actual asset because the asset is tangible and maintains and has a value associated with it. And we found that you can buy consistently below market and you can actually run a very short-term fund. So the assets, we don't worry about tariffs because we can buy wine, from the right collection or in a bonded warehouse in London and move it from one side to the other. So we don't have to worry about the tariffs. So what we find is that the investors tend to be, a lot of high net worth individuals already are familiar with wine. They collect art, some, also comic books as well. They're familiar with the assets and they're familiar with them as being investable. So they understand that you don't necessarily need to. You can take possession, but there's also things you can do with it while it's in your possession. Like the art, you can be rented out, there's a track record for that. So offices and high net worth individuals and families will rent a piece of art for 10%, and it's usually 10% of the value plus they cover insurance. So there's a lot of flexibility in taking possession of the asset and the different things you can do with it while you have it.
I'll point out that actually, some of the value of what you do, and we've spotted this in other markets, is that you're able to take possession because why the assets aren't necessarily more easily traded is because not everybody can hold them. And so we see this again, time and time again in the market. If you're actually able to hold assets that are difficult to hold, that's a bit of an advantage. And you're one fund, but I think you're a little bit of a microcosm of something that's happening on a bigger stage, which is looking for alternative assets.